I do have a question. I was a little late to the meeting today because I was talking to a potential buyer of a listing, and she's going to fill out a LOI. She wants to buy the business, she's told me. And you brought up something that um, in the due diligence, it's like a homeowner a disclosure, documents. And I don't
Oh, a
think
seller disclosure?
Right. Well, I said homeowner, but I meant seller
Hmm.
disclosure. But it's like a homeowner. We're all familiar with selling a house, I assume, and we've done that, maybe most of us. And so I don't know that I did that. I've done that before.
Mm.
Had these seller disclosures. Now I let the buyer do the due diligence. I thought that kind of covered me a little bit on due diligence.
Well,
Diane
it might cover
shaking
you,
her
but it
head
doesn't
no
really
there.
cover the seller.
Yeah, that's true.
I'm sorry, what?
It might cover you, but it doesn't necessarily cover the seller.
Mm. Yes.
Because on due diligence, the buyer is asking for certain documents and asking certain questions, and the seller is providing that information. But it's kind of if the buyer doesn't ask and the seller doesn't disclose, right? Then you have a potential conflict if the buyer becomes aware of something after closing and says, well, that was material, you should have disclosed that. And the seller was like, I didn't even think about it. I mean, because the sellers are so integrated into their business. It's kind of the daily thing for that for most of the business owners. And so, they can walk past something, or they can see something in their own business, and it doesn't
Yeah.
register to them that
No,
that's
I
something
get
that
the
might be
point.
concerning to a buyer.
I feel a little bit ignorant about that, and so I'm glad you brought it up. And I was actually listening. Do you have forms like that you would be willing to share, or is that a California form?
Well, we have, I mean, I use California cab forms, seller disclosures, but EXP had a seller disclosure form that they put together. Um,
Okay, I'll go hunt for that. But thanks for bringing that up. Now it's just one more thing I need to put onto a list of checklist of something, and you know.
I mean, they had that. When you do a business transaction and you're using that business transaction checklist in SkySlope, that's one of the forms that's on there is a seller disclosure.
Well, it's
Oh, maybe
potentially
not
I
in
would.
Washington. Maybe it's not in Washington because I
Uh,
don't know if that business broker checklist is the same in all states.
I doubt it. I don't think it's the same. Yeah.
Okay. So it
But
could be
anyway,
that your state broker didn't make that a required form
yeah,
or even an optional form.
yeah. It's a good idea, and I think it's legitimate. It makes the seller feel better or the buyer feel better too. So, uh,
Yeah.
we want these things to close, and we want everyone to be happy on both sides and feel comfortable and do our due diligence as best as possible. And a lot of the businesses that we're dealing with are smaller, not sophisticated buyers necessarily or sellers.
Mm.
Uh, I don't typically would use EBITDA on most of these because they're a smaller business. Now, my answer to people that ask about EBITDA versus SDE is I say, well, I use SDE for these businesses because they're owner operated. They're not managed,
Yeah.
and it's not an investor coming in to buy them. And so basically you're going to come in and own it and run it yourself. And so I use SDE. But
Mm.
I don't know what your answer is to people that ask that.
I just tell them kind of the same thing. It's like the only difference between EBITDA and SDE is that with SDE or seller's discretionary earnings, you're adding back one owner's compensation. So it's just EBITDA plus one owner's
Yeah.
compensation. I mean, that's really all it is. So for that reason that you're normalizing to an owner operator situation, which is what Main Street businesses typically are, how Main Street businesses are valued. And so, and that is true. Like, for example, you might have somebody who owns 4 yogurt shops and they're selling one. They don't operate that one, but nonetheless, they have if they have a manager there, you're still going to add back that manager's salary to make it owner operated, because that's how you're normalizing. You need to be able to compare apples and apples. So if you're doing a business valuation on a Main Street business, you are generally using a multiple of SDE, seller's discretionary earnings. Or some people now are starting to call it ODE, owner's discretionary earnings, right? As opposed
What
to
do you
SDE, but
prefer,
same thing.
ODE or SDE?
I still use SDE just because most of the time, just because, that's kind of what I'm accustomed to, but I might go back and forth.
Are the multiples, in your experience, easier to find for EBITDA than they are SDE or vice versa?
You are, I mean, as far as rules of thumb and multiples go, your rules of thumb and your multiples for SDE are generally not going to exceed about a 3.5. And that's when your SDE is getting, up closer to that, over that $500,000 mark. So EBITDA wise, I mean, I think you can look in Business Reference Guide and it's going to give you both as rule of thumb. It'll give you SDE and it'll give you EBITDA multiples. I would say though that your SDE multiples you have to be careful with, because one thing that it doesn't factor in is that, in my experience, the lower the SDE, the lower the multiple. And so it doesn't factor that in. It might say that your rule of thumb SDE multiple is going to be 2.5 to 3, or even 2.5. But if your SDE is only $30,000, it's not going to be 2.5. It's going to probably be 1.5. So your rules of thumb are exactly that. They're just rules of thumb, but anything with SDE under $100,000, your multiples are generally going to be lower than what is stated or what is reflected in that business reference guide. And that's been my experience on the smaller deals.
So you said the business reference guide.
Yeah.
Okay.
I mean, that's just one data point. And so but it is for rules of thumb, it's a free benefit through IBBA, so you might as well use it. I mean,
Right.
it's and it will give you rules of thumb usually for SDE, for EBITDA, and for EBIT. Well, nobody uses EBIT, but if you run the numbers for SDE, you run the numbers for EBITDA. Sometimes it'll give you SDE with inventory or without inventory. And then sometimes, like, let's say you're looking for manufacturing or something like that. Sometimes you can look in multiple categories, because you might find manufacturing, you might find under metal fabrication, but you also might find it under job shops. And so then you can look at the multiples for both, or the rules of thumb on the multiples for both. And so all of that to me is just data. It's just data points. And when you start looking at what it says, run those numbers, do the math on it, and then you start looking at how the numbers fall and what what are the risks in the business. The other thing it doesn't factor in is, let's say, for example, you are selling a liquor store and you go to Business Reference Guide and it tells you different multiples, whatever. But if that liquor store has had 5 robberies, 5 armed robberies in the last year, guess what? That multiple does not mean a thing, because you have a very high risk business at that point. And so your location, there are other things that factor in that have to be, or that should be factored in. because a buyer is going to factor in a risk, right? Buyers typically are going to look at every business, and a buyer wants to mitigate their risk as much as possible. So the higher the risk, the lower the value. This is always an offset there, right?
Yeah, that's very good. Very
So,
good information.
and then you can go out and you can go to BizComps and you can go to Deal Stats and you can go to, these other things and pull comps like you would pull comparables for real estate, except you don't even know how comparable that it really is
So
because
if I'm going to push back a little bit on your conversation, what you just said, not push back, it's actually, I'm going to dive deeper to what you just said when you went like this.
mhm.
Um, you don't really trust those numbers. Um, I think you've said more than once, because I've been listening to you for a while. You've got a kind of a range you have for multiples, and you could you give me that range again, or give us the range that you do? Because you don't go, I'm guessing you don't go in there and research all of this on IBBA's site for every listing you get. I'm guessing. I may be wrong. Am I wrong?
No, you're right. I don't pull a lot of comps and all of that because I've just not found them to be useful. They are useful on occasion, okay, on occasion, but most of the time I don't find them to be overly helpful because like I said, you don't, first of all, it's rare that I can ever find enough comps that are truly comparable. Secondly, trying to compare any type of business that's in California versus something that's in Minnesota or in Iowa or in some other state is probably not comparable, just because California is planet California, right? So things are just different here. And that doesn't mean that comps wouldn't be helpful for other brokers in other states. It's just, for me personally, being in California, I don't find that they're all that helpful because I usually can't find enough California businesses that are similar to make it worth my time and energy to go search them out.
So, could you give us your rule of thumb? Do you feel like doing that?
I mean, I can tell you in general terms, but it also, again, it depends on the business. So it's art and science, right? I mean, I've told you guys this before. So valuation, it's an art and a science, and it's I can tell you generally speaking, anything under $100,000, it's probably maybe 1 to 1.5 times, maybe 2 times tops.
You're talking about
Um,
SDE now, times
SDE,
SDE.
yeah, SDE. So let's say you have a business that's doing 65,000 in SDE, probably 99, I'd probably list that or recommend listing that around 99, maybe 1.5. Um, if it's doing 80,000 in SDE, then I might try for 150, 149. If it's doing, when the SDE starts climbing and now you're up over 100, you've got 125, 140, let's say 140 in SDE. Okay, so now I'm looking at probably 300, 299 to maybe 325, 320, depending on the seller, depending on the area, how many employees, how owner centric is it? Do they have any employees? If the only thing they have is husband and wife and son or daughter, that's a problem, right? So then lower end of the scale. And maybe even if it's doing 140, I might tell them, look, your whole family is leaving. Transferable value is substantially less. So there's
I've
other
got another
things that play
question
into it.
about
Yeah.
this. Thank you for that. That's really helpful, actually.
Can I inject real quick?
Yeah. Go
Tanya,
ahead.
if it's helpful for everybody and if it's okay with you, I have a link to the business reference guide through IBBA But you have to be a member and you have to have an account with them to be able to access it, I think. Is it okay to drop in the link
Yeah,
or?
go ahead. Sure.
Okay.
Yeah, drop it in the chat. And Dick, just before you move on to your next question, let me just go up the scale a little bit more. So, when you get up to 200, 250 in SDE, then you're looking closer to 3x, maybe might be able to get a little higher than a 3x, depending on the type of business, and whether it's got working capital. If there's AR included, that's going to be added on top. If there's inventory included, there again, it's so I don't have hard and fast rules. It's like things don't fit in a nice, neat box. I just have kind of a feel for it based on experience over the years, and I kind of know what will the market accept, because I don't want to put something out on the market and have it sit and have no interest in it. And so I want to definitely have interest in it. And even if I'm off by a little bit, let's say the seller wants a lot more, and I'm like, here's your range that I'm comfortable with. I'll list it at your number, but if we're not getting sufficient interest in 30 days, I want to drop it back to the high end of my range, and I'll get that commitment from him, or try to. Does that make sense?
Yes, but
Yeah.
for that information, did you put in the listing agreement, Tanya? Like if within 30 days, no one interest, you need to drop down the price. Do you put it in the listing agreement?
Yes.
Oh,
Yeah,
okay.
there's a
Thank
section
you.
in a rep agreement in California that says additional
Yeah. Oh, yeah.
information or something like that. I just put it in there. Yeah,
Okay.
or you can
Thank,
put it on an amendment if you
okay.
choose.
Thank you.
So, yeah.